Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com. I'm going to do a quick morning call pre-Yellen statement just to let you know where we are now. The last 2 days we've had two big gap downs. I've had about 20 handles each time where it was bought. Okay, bought when the market could have easily fallen apart. So, as a joke, which isn't really a joke, in the afternoon I started talking about how I feel like, gun to head, which I hate that figure of speech, we might see a move higher, considering we had every reason to go down and we did not. And then it also stirring the fact that I think every single second all day long the media was talking about the troubles with European banks and Deutsche Bank, so almost reached that capitulation point where they were due for some type of bounce, and that's what's leading Europe higher right now, where you have the DAX up 2.3%, you have the CAC up, you have the FTSE up, so that's helping our futures. So the question is, if you did go long last night into the up futures, I would at least take half off going into the Fed statements, and then see whether or not today's gap holds to get a little bit more upside follow through, or does the strength get sold like most rallies of 2016? So you want to map out some levels. So you go to the quick chart of the SPX, and you will see that here was your double bottom back in 2015 that gave you a higher low that led to a pivot to a big rally. So here you have the red dog reversal back on January 20th, gave you a quick little move up, wasn't ready, almost like this one, okay? And then you had a higher low on Monday, another higher low on Tuesday, and now at this point it's trying to see if it can clear this little spot, okay? So if you take a quick snapshot of the SPX on the daily, that is your area. So if the market wants to hold above, just say 1873-ish, which we're above, you have resistance 1 right here at the 8-day, okay, which has contained most of the rally since the start of the year when this pivot was broken to the downside. And then you have really the 21-day, which we did get towards when we got very overbought, which is a little closer to 1910. So that's why you want to be a bit careful if all you're doing is shorting this up open right here, because there is some room if things want to continue to bounce. So let the opening range get established. If you look at the spiders, you'll see that very similar, where yesterday you have a high here where it filled this gap. This is what we were bouncing off of a lot during the course of the prior week. So now this should be some resistance, and we're opening up right into it around 187.50. But if the market wanted to push, you do have that 8-day at 188.41. So for me, if I'm looking to short a rally, if you're looking to sell some longs overnight, this is your spot. If the bears want to take complete control, they fade the market into this 188.41 and then close it back below yesterday's high of 186.94. So we'll see what happens here. Then again, remember, during this little push above this wedge, we got to the 21-day, and that's all the way up here. So you want to take a little bit of care, just blindly shorting an up open, considering that we are still a little bit oversold. So looking for clues, look at high beta clues yesterday. A lot of good trades for guys who bought in the hole. We talked about how high beta was down 5-6 sessions, and it could be a good spot to go from red to green. And most of them did it, and then some of them didn't held better than others. So the question is, can some of these stay above yesterday's highs and push, or do they open up and just fail? And that'll give us some clues on the complexity and the composure of today. So strongest one from yesterday was Google, so let's talk about that. Google, here is your new pivot support. It's actually above the 200-day, and here is resistance 1. So resistance 1 is 720, which I believe it's a little bit below now. So see how it handles that spot. If it were to push above it, chances are the market's very strong today, and the next level is around 735, which I do think is a better sell than a buy. But the question is, can it get there? Netflix has been a decent bounce candidate too in the hole. It gave you a low on Monday, a higher low on Tuesday, and then this is the 8-day, which has been resistance during this entire move. So maybe it's going to open up a little bit above it today. So I would not be chasing it. I would think that some sellers, or if you're long it, get out around 90. But I think that ultimately, major sellers are going to come back if it could see 95-ish. But I don't even know if it'll get there. So this is like resistance 1. Here's resistance 2, and we'll see what type of move we have here, how easily they could sell it. Amazon went green yesterday, couldn't really hold up, and it's been very weak. This too has been battered and bruised since the breakout failure here, or the gap down after earnings when it took out 570, and now putting a little pivot. I would say, see if it can clear this. If it can clear 498, maybe there is a move towards 524, and that's probably where a lot of sellers will come in. So you have a little bit of room here. The question is, how much will it take? That's what I think all of us are going to be looking at. Does it open above yesterday's high and fail, which would be really weak, or does it open above, hold above for 30, 60 minutes and give you a push? And that's something a lot of us will be watching. As far as Apple, it's been getting very tight, down here. It stayed. I thought it was pretty impressive for it that it stayed above the 2015 low there of 92. So the question is, can it gain a little bit of a leadership quality and get above this 96 and rally a little bit? The 21-day, which it's been rejected at, which would be something different if it reclaims, is in here right around 97.67. So this has been good to go to in the down moves the past two sessions. The question is, can you buy it up and can it see that? So that's something that's also going to be a clue. So we want to see if high beta tech can get above yesterday's highs, hold above it for a little while, and push into resistance. That would help a gap and go. If they get above the high and they can't get any more traction and start to fail, chances are this up open is not going to stick or at least have any power. The banks have been battered and bruised. You have Deutsche Bank up 8-9%. So maybe our banks that have been so weak gap up and hold. Yesterday, Goldman Sachs, put a little pivot in here. So I would say resistance 1 is right there. So 153. So from here, got about 5 points of room, and then the 21-day has contained that. So, that's resistance 1. Maybe here will be resistance 2. If you want to look at another bank, JP Morgan was really weak yesterday, but it did come off the lows, and it's been, it actually held the prior 2016 low, so it's a little bit better than Goldman. See if it clears this, and then you have resistance 1, resistance 2. So the question right now is, can this up open, get rejected at resistance 1, or hold a little bit and get you to resistance 2 over a few sessions? And that's what active traders will be looking at. Yesterday, oil hit lows, and people thought it had to be fully correlated, but again, almost like the Deutsche Bank 7 to 10 time rule or the gun to head rule. About a week and a half ago, the front cover of the Wall Street Journal was how, markets move in tandem with oil step by step. So that headline probably changed that correlation. So anyway, oil closed on lows, and markets kind of ignored it. That was some clues to at least cover some shorts, just in case. And you will see what happens here if it holds or breaks the 2016 low, and whether or not the market will pay attention. This low here is 797. So if it wants to hold it a little bit and try and rally up, it can. But all in all, the 21-day here is also, has contained any rally. And so that's really it. This is a quick little morning call. I wanted to give you some levels. Futures are up 20, so you didn't have to, if you were thinking Yellen would spark a rally, you don't have to wait for her. If you took things overnight, you deserve to get paid. I would sell at least half into Yellen, if not almost 2/3, because we are up 20 handles. That's a lot. And if you're looking to just short any rally, make sure you know where resistance 1, resistance 2 is. See how high beta tech acts, see if the banks could hold up, and watch oil. That'll give you all clues on how to navigate if you come in flat and you figure out whether you could buy the first pull-in for a move higher, or you want a shorter rally for a failure. We shall see. Have a great morning, and I might see you again at 8:45 if a lot changes. If a lot doesn't change and she speaks and we're still up 20 handles, I'll probably see you at the recap, and I'll see you on Twitter. Have a great day trading.